Good morning, ladies and gentlemen. Welcome to the Gold Silver News. My name is Christian Garcia. Thank you for watching. Wow, this has really been an eventful week. It started with Italy being downgraded on Monday, and it continued with more downgrades later on the week. Yesterday with Wells Fargo, we had Citibank, and we had Bank of America downgraded, but coincidentally, our favorite bank, JP Morgan, wasn't. They're not under review. I wonder why. But either way, this is just nothing but a reflection of the true state of the banks. Our financial system is not sound, and we saw that with the Bank of England yesterday announcing that they're going to go ahead and inject their English banks with about 200 billion pounds to go ahead and help recapitalize those banks. And we saw also the Federal Reserve, Ben Bernanke, announced yesterday what's called Operation Twist, which goal is to go ahead and lower long-term interest rates by refinancing or rebuying the short-term bonds and reinvesting those proceeds. Now, they tried this back in the 60s. It didn't work. They want to go ahead and try it again, fine. We know the result. It's not going to work. Just like none of the previous stimulus packages, starting with TARP or the bailouts, none of this is going to work. This is a structural financial problem, and until they get to the root of the problem and actually fix the financial system, and we have a reorganizing and restructure of the economy, this problem is going to continue and persist. Now, we're seeing right now the dollar is benefiting from this chaos and turmoil. A lot of money is flowing towards the dollar. Again, investors have bad habits, or they're stuck on old habits, which are sometimes hard to get rid of, which in this case, it's a really bad habit. They're going to the dollar. If you're looking, a lot of all the markets are red right now. We're seeing major world sell-offs. It looks like the stock market is set to go and open right now, and it's going to go ahead. It looks like there's already negative 200 points on the futures. So we don't know if the sell-off or the massacre is going to continue, but you could definitely bank on the dollar increasing. We're getting reports out that different banks from across the pond in Europe, we're seeing Lloyd's of London, other major banks pulling their money out of the banks and actually depositing them with the ECB or and their European Union. So we're seeing this diversion of people or big institutions taking their money out scared, and they're sitting on cash, whether it's the euro, the pound, or the dollar. People are starting to sit on cash, and we're seeing a lot of exodus out of the markets. Now, you're seeing it reflected, that also is being reflected in gold and silver. Since global demand is expected to halt, the IMF did say that we've entered a different phase, a critical, dangerous new phase, and global downturn is expected. And the Federal Reserve also backed this statement up by saying that there's significant risk to a downturn in the future, and they've never used the word significant before. They focused on that word significant, which it is significant. We've already been anticipating this. The markets are going to continue on its downward spiral. I wrote about the death cross that we intersected a few weeks ago, and the stock market doesn't look like anywhere near a recovery. It's just a dead patient. It's going to continue dying. But going back to the dollar, it's rallying, and we're seeing, since global demand, or investors think that global demand is going to go ahead and fall, you're seeing commodities also taking a hit, specifically oil, and unfortunately gold and silver in the minds of a lot of investors. Remember, they still view this as a commodity. They don't look at this as currency, but of course, we know better. So go ahead and look at this price drops, as that's all it is. It's just a dip. It's a buying opportunity. We might continue seeing the dollar strengthen, which will probably affect metals in a not so good way. But we're seeing that as the banks try to beat down the price, our investors, or all investors, are the ones that know what's going on with gold and silver. You're seeing that as the price drops, investors are scooping in and buying it back up. So the banks are trying hard to knock down the price, but there's enough demand out there to go ahead and sustain it. So do not panic if you've already bought it. Don't worry about that. Maintain your position. Keep going forward. Nothing's changed. Global QE is in effect. Bank of England, The ECU, the IMF, is asking the European Union to go ahead and add more euros to their trust fund, and we already saw yesterday with the Federal Reserve. And let's not forget, Barack Obama is asking for another 447. So potentially on the chopping block, we have yesterday Ben Bernanke's 400 billion. We have President Obama's 447 job stimulus plan. So that's already close potentially to $847 billion. It's almost $1 trillion. And notice how sneaky they were about dividing it so that they don't throw a big number like that of $847 billion bailout. But that's all it is. It's more money printing on all over the globe. So you will not see an immediate positive reaction to gold and silver. You're still seeing a little nervousness, but long term, definitely this bodes very well for precious metals. So until Mike says differently, just continue, stay focused, stay the course, continue accumulating, all right? Thank you for watching. Any questions, please comment. I will try to get to them this weekend, and thank you for watching, and thank you all for those of you who support me. Have a good day. Bye.